Hey everyone, welcome back to the channel. Today we need to talk about Bigbear.ai, BBAI, and what's really going on with this stock because, let's be honest, it has not been an easy ride for investors lately. The chart continues to lean bearish, pressure is building from the downside, and bulls are struggling to defend key levels. So let's walk through the current setup, the technical picture, and of course the broader market factors that could completely change how this story plays out. Right now, Bigbear.ai is hovering around some very important levels of support. Recently, we dipped down to $4.73, which is not just a random price point. That number lines up almost perfectly with a Fibonacci extension level, making it a zone that traders are watching extremely closely. If the stock were to lose that level with conviction, the next likely destination would be somewhere near 456. Why that exact number? Well, that's where we also have the 200-day simple moving average, SMA, lining up another big technical indicator. Now here's the key. If we break 473 and then 456, things could accelerate quickly to the downside. Momentum could pick up as stop losses get triggered and weak hands exit their positions. But, and this is really important, we're still technically holding above support right now, which means it's not all doom and gloom yet. If this support area holds, then we could be looking at a bounce. And if a catalyst comes along to push sentiment upward, that bounce could easily last for several days or more. The bigger issue here is that we just haven't seen signs of accumulation at these levels yet. Prices are drifting lower slowly, which usually means people are losing interest rather than aggressively buying the dip. We haven't hit that peak fear moment where sellers capitulate and buyers rush in. And we definitely haven't had a momentum event, the kind of thing that lights a rocket under the stock because of a major piece of news or some strong fundamentals. Typically, when a momentum event is brewing, you'll see it in the volume before the news hits the wire. Maybe a day or two beforehand, the buying activity picks up. That can sometimes hint that smart money is positioning early, whether from speculation or just people taking a chance before the headlines land. Sometimes there's even a quick shakeout before the big move, where traders drive the stock down to scare people out, only to then reverse it sharply upward. That's how those rocket ship moves are often born. But with Bigbear.ai, we're not seeing that yet. So what should we watch for? Well, if the support breaks, expect a faster drop to those lower support levels. If it holds, and especially if some positive news drops in the near future, we could finally see an upside move. But here's the catch. The outcome also heavily depends on the broader market bias. Let's zoom out for a moment. Right now, much of Wall Street is watching inflation data and how the Federal Reserve will react. If inflation numbers come in soft or even just in line with expectations, that gives markets some breathing room. The labor market is already showing signs of cooling off, and inflation is not running as hot as feared earlier in the year. So the big question is, why is the Fed still holding rates at restrictive levels? A lot of people believe that in September the Fed could finally cut interest rates. The big debate is whether it will be a 25 basis point cut or a more aggressive 50 basis point cut. According to CME's FedWatch tool, as of now, there's roughly a 92% probability of a 25-point cut and about an 8% probability of a 50-point cut. That might sound small, but statistically speaking, 8% is not insignificant. In other words, a larger cut is still very much on the table. And remember, the Fed meeting in September will be a huge volatility event. The decision will drop around 2 p.m. Eastern, followed by Jerome Powell's press conference around 2:30 p.m. That's the type of moment where markets can swing wildly in either direction, and Bigbear.ai won't be immune to that volatility. So where does this leave us? Personally, I think the overall market still leans bullish. We haven't seen enough evidence to suggest that we're entering a true downturn yet. That doesn't mean you should go all in blindly. It just means the path of least resistance still seems to be upward, as long as inflation data and Fed policy don't throw any big surprises. Let's put this into perspective with some other names in the market. Nvidia, for example, could find support if inflation data comes in soft. That would relieve some of the downward pressure and maybe even flip it into upward momentum. Same with Palantir, PLTH, which has recently broken out of a long trading range and a symmetrical triangle pattern. That kind of breakout is usually very bullish, as long as it's not crushed by overall market weakness. SoFi is also showing similar signs of life, breaking above resistance levels that traders have been watching closely. If momentum continues, we could see a wave of green across these names. But let's also stay realistic. If inflation numbers surprise strongly to the upside, that would be the negative catalyst we don't want to see. In that scenario, markets would probably react harshly, and Bigbear.Ai, along with other growth names, would take a hit. Think of it as the fly swatter moment where bullish momentum gets slapped down hard. To sum it all up, Bigbear.Ai is at a critical juncture. Support levels are being tested, and the next few trading sessions could decide whether we see a bounce or another leg down. The broader market, especially inflation data, and the Fed meeting will likely set the tone. If conditions line up in favor of bulls, there's potential for a strong rally not just in Bbai, but across growth and AI-related stocks. If not, we'll need to buckle up for more downside. So keep an eye on those technical levels, watch the volume closely, and most importantly, stay aware of the bigger picture with inflation and Fed policy. The next couple of weeks could be make or break, and the moves could be sharp. Thanks so much for tuning in, and as always, make sure you're prepared for volatility, because one way or another it's coming. This is not financial advice.